Welcome back to the Junius Malpe channel for another day's look at the news and headlines. We're going to probably be dominated mostly by more information coming to us about the Shanghai Gold Fix, the SGE, the Shanghai Gold Exchange. As you've known, we've done a couple of episodes. It's been the main focus here for the last week or so, mostly because of how important it is and how much it's going to affect us, currencies, and the precious metals market. So we'll take a quick look here at what's going on, what's happening this morning. Heard on the NPR this morning that the Dow was down. Took a quick look at it, and sure enough, down triple digits, 108.8, down 0.6%. S&P also down, NASDAQ also down. Looking at metals, silver again above the $17 mark. Gold up 12.20, almost 1% up at 12.42. Of course, these are not the closing numbers. We've still got plenty of hours left in the day where metals are going to trade, as well as the Asian markets tonight. So you never know where it's going to end up, and it really never does close, does it? But let's get right to the headlines here. I'm not going to cover this entire article because the best lines are at the very end of it, and a lot of it you already know, so we're just going to get to the end here. All you wanted to know about the Shanghai Gold Fix. This is out of a Hindu paper. I think it's from India, and the best lines here obviously in the back. Gold prices in India are linked closely to international prices. As dollar was the predominant currency used in fixing gold prices, the movement in dollar had a significant impact on the gold prices so far. If the popularity of the Shanghai Fix increases over the coming years, you might have to start looking at the Yuan movement to gauge the movement in gold. Yuan is a lot less volatile than the dollar. Gold prices could also fluctuate a lot less if benchmarked to the Chinese currency. While that seems quite far-fetched now, the determination of gold prices may be set to change significantly in the coming years. This affects your investments in gold ETFs, bars, and coins. The bottom line, watch out dollar, the dragon is hot on your heels. Yeah, that's for a lot of individuals are saying this is going to have no effect on the dollar, that the dollar is immune from any of these new changes in the gold market. And there's a counter argument to that. A lot of even Western experts are saying that yes, it does and it will have an effect on the dollar. Next story. Hong Kong's local gold exchange to work with ICBC in launch of the Shenzhen Services, Warehousing and Physical Settlement Service planned for Qinghai Free Trade Zone. The Hong Kong Gold Exchange has teamed up with Industrial and Commercial Bank of China, ICBC, to launch gold trading services in the Qinghai Free Trade Zone in September, providing custodial and physical settlement service targeted at commercial users and precious metals traders, according to the exchange head. Haywood Choing-tak-Hay, the honorary permanent president of the 105-year-old Chinese Gold and Silver Exchange Society, said the exchange has teamed up with ICBC to use its gold vault in Qinghai as a temporary bonded warehouse for Hong Kong traders and manufacturers to store their gold. The service is considered useful for companies using gold to fashion decorative items, as the yellow metal can be stored before being fashioned into jewelry and other gold products at the factories in Shenzhen. The local gold bourse plans to build Hong Kong $1 billion permanent gold vault facility, including a bonded warehouse, trading floor, and related offices areas in Qinghai. However, the project will take 2 years before completion, according to Choing. ICBC is the largest of 15 gold importers authorized in mainland China. It is the largest bank in the mainland and has an international branch network, which could provide bank clearing and settlement services, Choing said. ICBC's Macau branch also handles gold import and export services. Teaming up with ICBC would connect Hong Kong, Macau, Qinghai, and Shenzhen as a gold trading hub, he added. The Chinese Gold and Silver Exchange Society partnered with the Shanghai International Gold Board last year to provide a gold trading and custodial services. 21 Hong Kong financial companies are authorized to trade gold in Shanghai. The proposed Qinghai services is viewed as beneficial to Hong Kongers, as it will enable trade in Shanghai and physical settlement in Qinghai. The service is believed to be particularly useful to jewelry manufacturers with operations in Shenzhen. It will also be possible for large dealers to ship their bullion from Shanghai to Qinghai. The development of the gold industry will speed up the physical delivery process of gold trading in Hong Kong, Shanghai, and Qinghai. Of China's 3,000 gold jewelry manufacturers, 70% have factories in Shenzhen. The bonded warehouses in Qinghai, which is next to Shenzhen, would make it much easier for them to access gold when needed, he said. The Chinese Gold and Silver Exchange has knowledge and experience in trading and settlement of physical gold for 105 years. We have an electronic trading platform, and we have the system to deliver physical gold for end users. If you look at the historical record, it shows we can compete with rivals. And for those of you out there who thought they only traded in gold, there you go. You can see they mentioned their silver exchange. And if you look at history going back 7,000 years, the Chinese and Asian markets did trade quite significantly in silver. It's a very important metal to them over there, and you're going to see further emphasis of that as we move on in these articles. So who knows? Some of the movements we've seen lately in silver could have something tied to this. There could be also some trade opening up and an increase in demand and movement in silver overseas. This comes to us from the Himalayan Times. Gold and silver prices rise. Investors have started parking investments in the precious metal as the chief of the European Central Bank hinted that the upcoming monetary policy may elevate inflation. The European Central Bank chief recently opined that the prevailing negative interest rate in Europe has been a hindrance in accelerating economic growth there. On the other hand, a strong euro against the dollar was another reason for gold prices rising in the European market. Similarly, China's entry in the international bullion market through the operation of the Shanghai Gold Exchange, along with the increasing demand for gold in China, were the other reasons for gold witnessing a price rise. Are you guys noticing the theme here? The SGE is popping up internationally in financial news outlets as being a driving force for accelerating the gold price. Now, this goes out to all the silver viewers out there. This piece says a little snippet of news out of the same article is especially for you guys. Likewise, price of silver also increased by 3.33%. I believe this is in rupees, or 25 per tola a week over the week. The market opened on Sunday with silver price fixed at, again, $7.50 per tola, and its price remained the same till Tuesday. Price of the white metal increased by a whopping, and I believe again this is 25 rupees per tola, on Wednesday to $7.75 at tola, and remained unchanged till Friday. So you can see silver, what they refer to as the white metal, is getting some attention internationally, and they're also seeing it rise with demand and movement overseas. Coming at you from the China Business Weekly, China's new gold fix. More information coming at us last week. China launched its Yuan denominated gold benchmark, which we've covered in detail again on this channel, with twice daily auctions on the Shanghai Gold Exchange to fix the price of gold. There will be 18 trading members taking part in the Yuan price setting process. In addition to Chinese banks, there are two foreign banks, Standard Chartered and ANZ, two of China's biggest gold miners, plus the world's top jewelry retailer, Chow Tai Fook. The launch of the SGE is being hailed as a landmark event, which will challenge the century-old system of fixing the gold price in London on the London Bullion Market Association, LBMA. This is significant, as gold is not only a commodity, but it has been used historically to set the level of global currencies. Historically, to set the level of global currencies. Even today, it is recognized as a highly valuable asset class, which is held as reserves by the IMF, governments, and central banks around the world. Someone needs to alert the IMF and the governments and central banks around the world that it's an archaic and barbarous relic that will one day be worth nothing. One important difference between the gold fix on the SGE and the LBMA is that the SGE requires the party purchasing gold futures to deposit physical gold at the exchange. Another key piece of information here, guys. Requiring the party that's purchasing gold futures to deposit physical gold at the exchange. This is expected to create a price differential, with the Chinese exchange having a higher price than the London exchange. That just means that the Chinese market's going to be more honorable and more able to fulfill physical delivery. Key piece of information there. Key piece of information there. There has been much speculation about the significance of the establishment of the SGE. At the simplest level, it will give China a greater say in the bullion industry. Later this year, China will pass another major milestone when it begins trading its first crude oil contracts in Yuan. The trend towards pricing commodities in the Chinese currency will also accelerate China's plans to internationalize the yuan. As more and more transactions take place in yuan, governments and central banks and companies will wish to increase their holdings of yuan reserves. This in turn will support Shanghai's role as a leading financial center. Now we'll get to some predictions from experts and financial analysts. Gold already on its way up, may head even higher, says a technician from CNBC. This was just out the other night. Gold bugs, talking to us, but we like to refer to ourselves as gold hawks, right? Gold bugs may have a firmer grip on the market than you think. Spiro is forecasting the yellow metal to cost about $200 more an ounce by the end of the year. He added that $14.50 is my objective. Once we get a break above the 1280 area, I suspect there will be a fast directional move higher. Now, if a lot of you guys remember coming into this year, many of the financial experts and analysts were downplaying gold, its role, and stating that they were predicting things as far as 750, 600, 500. Gold was going to plummet. 2016 was going to beat gold into submission. There would be Federal Reserve interest rate hikes, and gold would be severely damaged and tarnished by an improving economy and a recovery and rising interest rates. That has not happened. We've seen quite the opposite. Gold is doing better and had, what did we say, what did we report on earlier? It was one of the fastest rises in price in 30 years. So that's not happening. And now that we're seeing with the changes in the Asian markets, and we've heard statements like that gold has been almost basically cemented at the price levels we're seeing now, with the sky being the limit at this point. Now we're seeing the dollar being threatened. Again, Asian markets kind of moving in and establishing some dominance and challenging the West's monopoly over currencies and reserve currencies, so on. So very interesting times that we're moving into. Absolutely incredible. And just keep your eyes on it. Keep focused. And drop a comment down below. Thanks for liking, for sharing these videos. Thanks for subscribing to the channel. And to those few of you out there who really appreciate the channel and help support it here, I humbly thank you and appreciate all of your small donations that you've given to the channel by clicking that little watermark up there on the right hand side of the screen. Thank you all for being here and participating in the Junius Maltby channel. Have a great day.